The game is rigged. The rich become richer, the poor become poorer, work becomes less and less valuable over time. But let's have a look how to potentially beat the system. How much do we have to earn? How much do we have to invest? Where is the threshold? There are several eye-openers in this video, especially if you haven't watched these macro-related videos on this channel yet. You will discover things that other channels will not tell you. So this is why everybody tells you to invest in the S&P 500 over the long term. With time, prices tend to go up despite some crashes here and there, right? Simply just buy the crashes, hold over the decades, and you should be fine. But here's the problem. This is the S&P 500. But at the same time, we've got this chart over here. This is US money supply. So over time, the money that's floating in the economy is expanding as well. So if we don't trust the official inflation numbers, if we actually look at monetary expansion, and if we consider how fast are houses becoming more expensive, how fast is education becoming more expensive, how fast is medical aid becoming more expensive, then again, I believe USM2, the monetary expansion, is much more important than the official inflation numbers. And so when we look at the S&P 500 divided by the US money supply, then we get this long-term chart. We pretty much have zero return. This chart starts in 1959. So I've talked about this in the past on this channel. I'm not going to repeat this. There's another learning that will be very eye-opening. Check out the household income data. Again, over the decades. The household income data is split up in different quintiles, so 20% brackets, from the average earning of the lowest 20% up to the highest 20%, and we even got the highest 5%. And when we look at the growth rate from 1970 to 2022, we can see that it tends to grow faster the more you're already earning. So the poor people tend to be falling behind more. Their income grows only by 4.1%. The top 5%'s income grows by 5.3%. But here comes the catch. Look at the money supply expansion during the same time. It's around 7%. So you can be in the top 5% of earners. You're growing already your income way faster than the bottom of society, and still you are increasing your income slower than monetary expansion. Who is winning here? The winners in this game is not the highest earners. You can be a surgeon, you can be a lawyer, and still over the decades you are going to fall behind. Top 5% is not a guarantee to be able to catch up with house prices better. You are falling behind less quickly than the average Joe, but still you're falling behind over time. I believe there is a solution to all of this though. It's not a risk-free solution, but there is a solution. Let me show you. So the winners of the system are not the top 5% earners. And it's also not the people that invest in the S&P 500, because that doesn't really outperform monetary expansion. You simply just keep pace. There is something though that does outperform monetary expansion. And yes, Bitcoin of course does, but Bitcoin is hyper volatile. There's something else. Check this out. This is the Nasdaq since 1985. And yes, we had our .com bubble, and here the vertical line, by the way, is the launch of Bitcoin. But the growth of this chart is faster than USM2. So let's look this up. NDX divided by USM2 by the monetary supply. That's what we see. Tech stocks do tend over the decades to do better than monetary expansion. And so you're falling behind with your income, most likely, if you're not in the top 0.1%. You're falling behind with your S&P 500 ETFs, or at least you simply just keep pace. But you can become a winner of this rigged system by investing in tech. At least that's what worked in the past. And the good news is you don't even need that much money to become a winner. Again, let's check out the numbers. The average income of the top 5% is $500,000 per year. So you're actually looking at the top 2.5%, maybe 2%, because we've got some skewness. So top 2% make $500,000, and their income grew only by 5.3%. But the Nasdaq 100, since its launch, made 13.7%. So you're falling behind by 5% per annum. Monetary expansion is 7%. Your income growth is 5.4%. You're falling behind by 1.6%. Every single year, by the way, right? This compounds. This matters over 30 years. However, if you're owning the Nasdaq 100 ETF, and yes, there There is a bit of fee in this, so that's why fees matter. But if you just look at the Nasdaq 100 ETF, you ignore taxes, you ignore fees, then you make a net return after monetary expansion of 6.7%. So your capital grows by roughly 4 times faster compared to how much you're falling behind every year with your income. In other words, you only need 1/4 of your annual income saved up in the Nasdaq 100 to cancel out how much you're falling behind every year. You're a winner in this capitalistic system in the US if you've got more than 120K in the Nasdaq 100 and you're in the top 5% earners. Now, if you're not in the top 5% earners and you want to cancel out how much you're falling behind, here are the numbers. So let's say you're the average Joe. You're in the third quintile. You have the medium income in the third quintile. That's currently $74,730 per annum, of course. You're falling behind every year by 2.7%. There's more money printing than your income increases on average. So 2.7% is what you have to beat with investments by getting into the Nasdaq 100. How much do you need to have invested for that? Since you're gaining 6.7% annually versus US M2, you need 1/2.46 times your annual salary to beat the system, to not fall behind. How much is that? It's $30,000. So those are the very long-term effects. Every year, on average, if you simply just stay in the same bracket, societally speaking, income speaking, if you simply just stay where you are and you're making $74,000 a year, if you've got $30,000 stashed away in a low-cost Nasdaq 100 ETF, at least you are not falling behind. Without the investment, you do fall behind. Again, because incomes over the long term increase much slower than capital. This needs to go to 1 million, or March buyers now will make millions. This is how you get the clicks on YouTube, but this is not how you beat the market. To beat the market in crypto, you need to be better informed than the rest. You need to be better skilled than the rest. You need to do better blockchain analytics. You need to track other people's wallets and know what is the smart money doing. It's the boring educational content that forms skill that doesn't perform so well on YouTube though. That's why I created the premium membership. Feel free to check it out. We are tracking influencer wallets to find out what they are buying before promoting this on YouTube. We've got a lot of tutorials to help with on-chain analytics, to help with wallet discovery. And of course, there are also plenty of chats where we help each other, and also one-on-one conversations with me. So I'm messaging every premium member one-on-one directly. Once you're joining, you will get a message from me and you have the opportunity to directly pick my brain. Feel free to check it out, thebitcointrader.com, link is down below. And so this effect can probably not be felt over 1 year. It cannot be felt over 5 years, maybe not even over 10 years, but over 30 years, it will be quite significant. And this will have an impact, for example, on our kids, right? 30 years, that's one generation. They will definitely have it way harder to beat the system. They will have it even harder to buy the house. So it's even more important for them to buy relatively high risk assets. And that's how I actually explain why there's so much demand for Bitcoin. Why are people buying Bitcoin in the first place? Why are people getting into tech stocks in the first place? Why aren't people anymore interested in this 60-40 portfolio, right? In the early days, people said you need to have 60% stocks, 40% bonds. Nowadays, nobody wants to buy bonds anymore. Why is the risk tolerance going up that much? I believe because people feel that it's getting harder. It's not obvious over 1 year, it's not obvious over 5 years, but when the average person is falling behind by 2.7% every year, then when we compound this over the course of a generation, so 30 years, you only have half the purchasing power left. So if you can currently afford $1 million house with your lawyer degree, then your children likely with the same kind of degree, with the same kind of job, can only afford a house that's equal to $500,000 in today's money. Capital concentration is a real thing. If your parents bought a house worth $1 million and you have only been able to buy an apartment worth $500,000, you actually, relatively speaking, simply just by looking at earning power, not at investing, so simply just looking at earning power, you did just as well as your parents. So if your parents currently have $1 million house, you've got a $500,000 flat, you are doing fine, relatively speaking. The only reason why you fell behind is because your parents did not invest for you. Capitalism is a game that favors people with capital. It is not necessarily a game that favors people that work hard. Even the top 2% of society cannot outwork the pace at which capital tends to grow. So in case you've got children, make sure to somewhat protect them from this effect. Buy every month a little bit into the Nasdaq 100, buy every month a little bit into Bitcoin. And if you do this over the years until their career starts, they should have already enough to, at least over the long term, not fall behind, right? If they want to buy a house at some point, just tell them, I will pay half of the down payment so that they can actually buy a house of double the size that they could usually afford. Then they're facing the same struggle as you have had. Because again, the average earner will have it double as hard a generation from now. Not necessarily for consumer goods, because those are deflationary over time, right? They're easier to produce over time. So the TV will still be affordable, food will still be somewhat affordable, but the things that will not be affordable is medical care, is education, is the house. And so simply make sure that you dollar cost average into something to protect them somewhat from this. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. If you are interested in crypto trading, in crypto investing, etc., and you want to beat the system, not just with the Nasdaq 100, but also with crypto, then I want to invite you to join our Telegram channel. It's 100% free. Looking forward to seeing you there. Cheers.